Hey fellow Stock Guardians, it's Thursday, April 29th, 2021. I'm Hoda, co-founder and CEO of StockGuard, reporting to you from a green stock market. I dug into the stock market indices movements, researched 1-800-FLWS.com as a possible fit for value investors, and discussed why Teladoc's stock price drop isn't as worrisome as the market makes it seem to be. The stock market indices finished Thursday in the green after a few positive economic indicators. Thanks to the reopening, the US GDP grew more than 6% in the first quarter, and the number of new jobless claims dropped by another 13,000 to 530,000. However, the drop was lower than expected, and the Fed's yesterday's remark about continuing to maintain its policies until we reach a sustained long-term inflation rate above 2% balanced off the impact of the positive economic indicators. Overall, it was a good day for the market. On top of the list of the most viewed stocks for the day, I noticed 1-800-FLWS.com, ticker FLWS. The ticker was up more than 20% today. It's the stock from my 4 greener watch list, which is a list of stocks that have high growth potential, strong operations, solid track record of overperforming the market, and are also undervalued. The company reported its quarterly earnings today. It grew its revenue by 70%, and the net income for the quarter turned positive compared with a loss in the previous year. It also forecasted a good growth for the next quarter. Moreover, the company's board of directors approved new share buybacks, which can be a confirmation that the stock is undervalued compared to what the management believes as a fair share price for the company's stock. By the way, if you'd want to get a hold of my 4 greener watch list, I leave a link in the show notes. There could be another solid company that is also undervalued that you may want to consider if you are a value investor. Shares of Teladoc were down more than 8% today. I own a few shares that I picked up on March 4th this year. The stock had another quarter with a bigger than expected loss, which led to several price cuts by analysts. You go through the company's investor presentation and there is nothing to worry about. Revenue is growing, the company has signed new commercial agreements, and it is on its way for better integration of Teladoc and Livongo's platform after the acquisition. As we said, investors got spooked by the wider than expected net loss, but when you dig deep, you'll notice almost 90 million of the net loss is coming from stock-based compensation related to Livongo's acquisition as the employees of Livongo's stocks get vested post the acquisition. The other thing that is important to pay attention is that the company forecasted for somewhat a stable membership and fee-based customers growth in the second quarter, which is quite reasonable considering the rapid growth during the pandemic. I believe this can be a buying opportunity for those long-term investors who are okay with the stock price volatility, taking advantage of the post-pandemic pullback. I may consider adding a few more shares in the next few days. With this price drop, one may consider Teladoc as a value buy now. Folks, tomorrow at 1 p.m. Pacific, I'll host my usual weekly meet and greet session. Join me if you have any questions about how to use the StockGuard in your research. The link to reserve your spot is in the show notes. And in the meantime, please give StockGuard a try, research as many stocks and ETFs as you want, and consider following a few successful investors by visiting the Stock Picks page on the StockGuard platform. Don't forget to sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. And as always, help us grow the StockGuard community by liking, subscribing, and sharing these daily market recap reports with your fellow investors. I'll see you tomorrow.